Hey guys, how are we all doing? So Dan from Trading with Dan here. This is our Forex update for the day. So if you guys wouldn't mind smashing that thumbs up button, and we will get straight over to those charts. So Euro US dollar daily. You can see we're just having a little bit of a pullback, a bit of indecision around this this ultimate high level that we're looking at. Pretty much taking this out. Well, it's been blue skies, it seems, for a while, but it'll be actual blue sky breakout. I would just be a bit cognizant of the fact we are pulling away from the moving averages, as you can see, the 21 daily, one of my more favorite ones to follow. But yeah, you can see we can have a big move away from it, but usually we will come back to test it, as you can clearly see we have done so. Just be aware of that fact. But yeah, if it does look bullish, like we can break up here at least into our TD daily 9, that we will potentially get in a couple of days, providing we don't sell off from here. But yeah, just looking very bullish. I mean, this is this is a great chart. Basically, this is like a great example of a great trade. What you have here is the golden cross, so that's the 50 period moving over the 200 on the daily. You have the 21 guiding up price. You have the moving averages obviously all in the correct order. Obviously the golden cross was what made them all in the correct order. You have a big breakup. You have basically the back test, find some support around the moving averages, and then around the 21 daily, and then pushing on and moving onwards and upwards, and then taking out the previous highs basically. This is a textbook trade. It's sort of a textbook entry. There are lots of textbook entries. The textbook's quite thick, but this is indeed one of them. And it now has a very bullish posture, and what I would expect is this to accelerate to the upside. Moving averages, especially the 21, the faster period one, to accelerate to the upside, and us just to be guided upwards by the 21. I'll have a look back in time, see if we can kind of see any similar sort of action. I mean, we've got it to the downside here, getting guided down by the 21 in this case. Sorry, I just need to sneeze. Guided down by the 21. I'm just trying to find a bullish example. How far away was it? Yeah, here we go. So this is a perfect example of kind of what I'm kind of saying. So in fact, it's a very similar example, probably a bit more of an aggressive move. But yeah, so we sort of had this this bottoming formation put in, what would look to be an ascending triangle that broke out pretty early, as far as ascending triangles go. But it was an ascending triangle nonetheless, very clear, to be honest. Here and here. To be honest, they are liable to break at 25% full. So actually, it's 75% full, 25% remaining. So that's near there or thereabouts. So we got the breakout. We came and back tested. We then had a big move up, accelerating away from, well, these moving averages especially. We got the golden cross. We came back in. Obviously, we were accelerating with the 21 daily, so we actually came back and back tested the 50 period. But we had the golden cross, moving averages in a the perfect posture and order. And then we can see we just got guided up by the 21, and then didn't really look to test any downside until we until we basically broke the 21, basically, and then closed some few dailies below it, and then we got guided down a bit, and then we retook it again. And then incidentally, when we retook the 21, we then pretty much got guided up by it again. So I mean, that is the sort of behavior that's from, when's that, 2018. That is the sort of behavior that I'm potentially expecting to occur right now. This to accelerate to the upside, get guided up by the 21, potentially have some touchbacks to the 50 period, in that sort of trigger zone between the 50 and the 21. But really, the 21 daily should be what is holding up. And if we break below that, we start closing dailies below the 21. Then that would indicate more, probably more longer term downwards directional weakness. So yeah, we probably spoke a bit too much about that, but it's useful. It's a useful tip nonetheless. But yeah, look, this does look like a typical bull flag, looking like we are going to break up here. But if we don't, well, to be honest, we had this resistance we overcame, have back tested it, swung through it, back up again, back tested it again. So I would expect us to make progress to the upside from here. And on the 4 hour, you can kind of see a bit more clearly the clear of the period of low, high, low, high, low, and the flat top. So it is basically forming an ascending triangle of sorts. So yeah, so just nothing bearish about this, so expect more upside until obviously proven otherwise. Proven otherwise will be basically losing the daily 21, which is a long way from price. Right, we spent a long time on that. So over to cable. Cable looking good here, looking looking good, looking at retaking the daily 200, which is important. Is important to retake the daily 100. We kind of, I mean, you can see the importance of the daily 100, daily 100. Obviously once we lost it, we were edging closer to it, and then once we lost it, it was curtains, and then we came back, nearly got to it, poked above it again, came back down, got resisted at it again, and now we're above it again. So we have only had wicks previously, apart from obviously looking back this far, but only had wicks above here. So we actually first closed our first daily above this horizontal, and we are looking at basically retaking the 200. I mean, that's the gist of it. Obviously it's a level we could definitely get rejected at, but we are attacking this with quite a bullish posture, with obviously this low and this higher low, and this low, this touch of the daily 21, which we love to talk about, the daily 21, I think only came about because we had the daily 9, and that caused the weakness, and then we retook the highs of that daily 9, and the close, the open of that daily 9, the body of the daily 9, and are making more progress to the upside. So this is looking constructive, looking bullish. I think it's got every chance of breaking the 200, which will be, it's basically the sign between a bullish market and a bearish market. So yeah, I would look for acceleration to the upside if we take that, and in fact we don't need to draw an arrow. We know, we can see the 200. We know what it means for the basis of our trading. And if we just want to do a bit of 200-day analysis here, I don't want to go back too far, but we take the 200. I mean we can go, look, lose the 200 bearish, we take the 200 bullish, lose the 200 bearish, fake, struggle to stay above it, bearish, struggle to stay above it again, but give it a better shot, bearish, and now we're going to try and take it again. Yeah, we have obviously got a pattern here though of clear pattern of lower lows. So I mean, it's very very early days in this break of the 200. So yeah, obviously if we do get rejected and we start to come down, we could realistically be targeting lower lows, but that's beyond the time scale of trades that I would take anyway. I mean, we're looking at a daily anyway, and something like that is obviously many days in the making. So we'll be all sorts of trade entries and ideas and exits and buys and sells between here and down here if we ever got down there. Right, dollar index, nice to see this breaking down as we would expect in this regime. We're at a critical zone basically here. Here we go. I mean, we lose this. I mean, we've already ticked lower. Yeah, this is this is not bullish, guys. This is not bullish. This is coming down. This is what a lot of gosh, just look at those markets. This is what a lot of the oil markets, the precious metal markets, the stock markets, a lot of this is predicated on a weak dollar, on the weak unit of account of those assets. So if that goes down, those assets have to go up. So there you go. So we can see, I mean, we're just breaking down here, not a lot to look. This is the level, we're looking at for acceleration sub 95. Sorry, I meant to click over to the 4 hour and I clicked over to a whole nother chart. Did we get, yeah, I mean, yeah, here's a TD9. So could we get held up here by this 4 hour TD9? We very much could. And I mean, not that I really analysed the 200 4 hour period at moving average, but we could come back for a test of it. Nothing wrong with that, but then I would expect the downside to play out. I mean, you can see the 4 hour 9 bounces a bit, 4 hour 9 bounces a bit, 4 hour 9 bounces a bit. I mean, 4 hour 9 bounces a lot. You can see they are efficacious. 4 hour 9 bounces, 4 hour 9 sold us down. So yeah, it is a good chart. It's a good time frame, a good strong time frame. The 4 hour time frame, the 4 hour chart to get us for a bounce. So yeah, maybe even up to here. I would suggest. I mean, I will draw this arrow on just because It will look great tomorrow if it works out, but failing that, we obviously know we are looking for this clearly. So yeah, just looking weak, which is obviously good for everything. Good for everything. Euro pound looking weak on the 4 hour. Yeah, looking weak on the daily. He's not really in much of a zone, but it looks like we are getting, I think we spoke about this, didn't we? Getting rejected up here and then basically coming down towards the bottom of this channel. It rings a bell. Looking at it, it looks like something I would have said. I would be looking out for the move down to the bottom of the channel. Obviously, this is a case of losing the daily 21. This day's not closed, so we could fake out and come back above. But look, we can easily, I mean, this is sort of what people call like the trigger zone between the 21 and the 50. So this sort of zone is the buy zone. Once you basically have an uptrending or a downtrending market, when these moving averages are in the correct order, 250 to 21, and so you obviously have this gap, not obviously, but you would have this gap if we are trending up between the 21 and the 50, both trending up, this gap, because obviously this is a faster period moving average. When you pull back into this zone, this is the trigger zone. This is where you can buy in the zone, and then obviously have your stop just below the 50 period. And as you can see, that's where we actually are now, although I would say the 21 period is flat, so we've not got much of a trend. So so that obviously does then tie into what I'm saying is maybe you are going to test some downside. But yeah, you can see this is flattening out, and also the actual trigger zone, you want like a nice healthy size trigger zone like this. This is narrowings, and it's like, I mean, consider it like an Ichimoku cloud. The cloud is getting thinner, therefore its actual support it can offer is getting less. And obviously your stop is below the 50, and we are getting close to below the 50. So yeah, I mean, I'll stand by what I said. This is potentially coming down, but yeah, obviously until it does, and it doesn't. But yeah, doji candle, yeah, it doesn't look like it's moving down. Do we have anything TD wise? Maybe we've got some on the 4 hour. Yeah, 4 hour 9 coming up, so maybe we will have a little bit of a bounce. You guys know that I like the 4 hour 9s. Here's one. Here's one, didn't work out too well, that one. There's one there at that low. Obviously, we grind it out a bit. Anyway, so Aussie dollar, Swiss franc. Look at that. Look at that. So we have this trading. Basically, buy above here. We are above there, and that's a long trade. Golden cross as well. There it is, 5200. 200 moving down, though, ever so slightly. But they are in the correct order. So this could now we've had the golden cross. Now we've retaken this horizontal, we come in and attack this one and onwards and upwards, and this could be a resumption of this downtrend. So yeah, that is what I'll be looking for. This also is one of those, in inverted commas, stock market charts, where it just basically follows the stock market. The reason it does that is Australia is like a commodity-driven risk-on currency. The Swiss franc is an extreme risk-off safe haven currency. So obviously, stock market's going down. Money wants to basically go into the safe haven currencies and out the risk currencies. And when stock markets go up, that's risk-on, and risk-on, so money goes into the risk assets. So that is why this looks like the stock market. Just FYI. But yeah, so I mean, the stock market's looking bullish, so just this doesn't look bullish. Dollar is going down, which is obviously, I mean, the dollar, you can view the dollar and the Swiss franc as similar currency pairs. They're both currencies that get sold when we have risk on, and then people buy other assets with that, and then when we have risk off, people then basically sell those assets and then basically get back into their Swiss francs or their dollars. Is how it is seen. Same with Japanese yen. Aussie dollar, oh wait, do we look at some other time frames? That's a 12 hour, and then the 4 hour. 4 hour might be getting on a 9 soon. Yeah, 4 hours getting on a 9 soon, but you know how I feel about accelerations into the 9s. So I wouldn't be looking to short it anytime soon, or even on the 9 candle. I'd be waiting to see how that candle plays out. Aussie dollar, New Zealand dollar, daily. This again is looking good. It's very similar. Looking for the breakout of those two, of these two horizontals we've got. I mean, clearly trading above this one is an important one. That one obviously, I mean, they're both important, but this one's more important. That I think could trigger a move all the way up to here. Nothing TD wise other than that absolutely beautiful daily 9 right down there, basically at the low, and it would market never look back. 12 hour, we also had that 9 on the 12 hour as well. Obviously a little bit earlier, but yeah, pump the market, great trades, and I believe, yeah, I was gonna say, we had the 4-hour 9 as well, guys. So if you weren't getting long here and you're trading the TD, then yeah, anyway. So yeah, anyway, just looking bullish, very bullish. You can see broken above here. Just get above this level and then we are onwards and upwards. US dollar, Japanese yen. So obviously, like I said, these are both similar risk on basically. So these go down when it's risk on and up when it's risk off. So you can see, and how I said these are very similar. You can see if we're just scrolling back in time, we'll go to the daily. What is wrong with my computer? It's because I'm scrolling back too many candles and it's trying to digest too much information. So you can see we don't really travel, we don't really go anywhere. Obviously back in, I mean, we are looking back. So basically, if we look at since sort of this area, which is 2015, so we're talking 5 years. 5 years, look, this pair's just basically not done anything in relation to each other. It's just stayed the same. I mean, that's it. That's all I want to say. But yeah, so it's not really one to really trade, just on that basis. So we are obviously got some lines in here that we've drawn for looking for trades. But yeah, there's better currencies to trade the way you'll get bigger moves. So as you can see, there's mainly range bound bitty price action, not really doing a lot. I mean, not really lots of trends. I mean, that's a 12-hour. I mean, 4-hour look at that. It's not going anywhere. I may even remove that from my list, but I won't. Canadian dollar, Swiss franc. You can see this one over to the daily first. Over to the daily, we are looking at making some more progress. Another one of those stock market currencies. Just again because Canadian dollar more commodity based risk on, Swiss franc again the same risk off. But yeah, making progress to the upside. I mean, you've got this break above here. I mean, we're going to move here, we're going to move here, we're going to move up. 200 daily is obviously there for the taking. 21 daily been retaken. We just need to start forming a trend here. There's no real trend going on. Yeah, we need to retake that 200 daily and get accelerating to the upside. That would be what I'd be looking for here. Here's sort of your 12-hour range you're looking at. Maybe we're getting a 4-hour 9 coming up here. Yes, we are. Maybe we'll get the 4-hour 9 support towards this resistance level. Would be a good sell entry. But yeah, but just for 4-hour scout, we get good moves off that. There's a 4-hour 9 there, nice move up. There's a 4-hour 9, nice move down. Didn't quite get to the 9 there, got to the 9 there before a bit of trending downwards. So nice 4-hour 9 trade, nice 4-hour 9 trade coming up. So definitely one to watch. Euro dollar, Japanese yen. Strong. It's not euro dollar, sorry. Euro Japanese yen. Yeah, I mean, it's bullish. We're gonna have daily 9 coming up, so I would expect this daily 9 will get some weakness. Maybe accelerate up to here. Daily 9 will bring us down, maybe down to this horizontal again, and then accelerate upwards. But we've got to basically wait now. But if I take a trade, it will basically be buying above here and expecting acceleration into that 9. But I wouldn't take that trade because I do know 9s can get front ran. In much the way this 9 got front ran. It's funny how the example was right there, but yeah, so I wouldn't really want to take the trade into basically an 8 or 9 candle. If you want to be long it, should have been long it already. So at basically the swing failure pattern on this daily 21 was your entry. US dollar, Canadian dollar breaking down. Obviously this is US dollar weakness that is breaking down. This is looking very much like the dollar index basket itself, the DXY. Dixie. So yeah, breaking down here. This is really your target. We'll extend this horizontal. That's what we're looking for. Anything on the TD, there won't be anything on the daily. There may be something on the 4-hour coming up or at us. Yeah, next candle of 4 hours. So maybe expect a bit more acceleration and then a bounce. Aussie dollar, New Zealand dollar. Again, dollar weakness. Dollar weakness is the name of the game today. Also, commodities rallying strongly, and this is a commodity currency. So yeah, we're taking this horizontal, guys. So this is literally a blue skies breakout in progress. So just you can stick your arrow where you like, as high as you like, probably get there within reason, just like we did with our Tesla one. I mean, there I put it up there. I think we'll probably make that. Yeah, looking for a good move here. Let me just quickly check those TD. Plenty of days to run on the daily 9s, on the daily TD, and maybe we've got time to run into this 4 hour as well. New Zealand dollar, US dollar, daily, again, similar. Oh, wow, this is on the brink of the breakout. This is basically looking good. Yeah, this is looking good, guys, basically. moving average posture, golden cross, moving average, 200 period starting to get the uptrend. Bounced off the daily 21. We love the daily 21, and look like it's moving upwards. What else can we say about that? No TD on the I've no TD on the 12 hour, and the 4 hour. Yeah, I'm gonna say the 4 hour may do. There's your 4 hour 9. Maybe a little bit more consolidation at this high, and then pop. US dollar Swiss franc. US dollar Swiss franc. So what was the one we're looking at there? Oh, Aussie dollar Swiss franc. US dollar Swiss franc. Breaking down, guys. It is breaking down. It is breaking down. What was that? I was talking rubbish up there. I was looking at the Australian dollar Swiss franc. Yeah, it looks like we're breaking down here. Yeah, so realistically, they are no real targets other than maybe this horizontal, which we will draw in just as a point of reference. But yeah, I mean, there's not really much to aim to target for. Yeah, not really too much to aim for really, other than potentially this horizontal. But yeah, looking bearish. Let's have a look at on the daily. I don't think we're going to have any TD9s coming up anytime soon. No, so we've got plenty of time to run. We had our bounce off the TD daily 9 here at the support level, and now it's basically curtains. It's like see you later. Maybe get a little bounce for myself, a little head and shoulders. Obviously, it's not a financial advice. When I say something's going to happen, it's don't take that. That is not intended to constitute daily financial advice. That's it. Don't take financial advice for someone that can't even talk. Right, here we go. US dollar Swiss franc. Sorry, US dollar Brazilian real. These obviously should be hopefully making moves down. No, I say hopefully, it doesn't really matter what they do, but obviously we've got dollar weakness, so yeah, still in a very much tight range. Not a lot we can read into that. US dollar Mexican peso, that is making a move down, looking good. Yeah, nice. And I mean, we had day 9 there. Initially got a bit of weakness, but we got broke back above. Big doji candle there, taking out the low of that big long wick doji candle, and then more downside. That is how markets like that. That's candlestick analysis for you right there. And yeah, so really, well, to be honest, I mean, this is an initial level. We'll probably have to draw this in as an initial target. But yeah, failing that, we are looking at this level next, and then I believe it's just nothing. It's just down and down. So that is a 4 hour, nothing TD wise, and we clearly won't have anything on the daily or the 12 hour to look at. I mean, the daily's not even flicked to a bear count yet. It's still on their green too. Right, US dollar Turkish lira. I mean, yeah, this is like finally making a little bit of a move with this dollar move. So are we gonna get some get an actual move down? Are we? We were going to keep on having to extend this because we stay in this range forever. And this as well, look, keep on having to extend that. And we'll just borrow one of these lines. It's the same line, it's the same break, it's the same trade, but it's just taking its sweet time. And then, yeah, I mean, targeting the 200 day. So we may as well move this to where the 200 day is potentially going to be now. So that's kind of what we're looking at, guys. So there we go. That's our FOREX update. Bit longer than usual, so apologies for that. But yeah, so thanks for listening. And remember, not a financial advice. I'm not a financial advisor. Always do your own research. And I will speak to you guys on the next one.